Hello everyone. In this video, we'll be learning about journal entries which are related to the loss of stock due to fire and the final adjusting entries. Now, starting from the first entry, goods destroyed due to fire rupees 3000. What will we write for that? See, we know that it is a loss of us. We have lost the goods and we will write here loss due to fire account debit. Why are we debiting loss? Remember, asset, expenses, losses, drawings are always debited. Loss due to fire account debit 3000, and then 2 goods are burnt, so the goods account will reduce, and I have already told you we do not maintain goods account, we prepare purchase account for the goods account. So we will remove the balance from to purchase account. To purchase account, that is 3000. You can write here being goods destroyed due to fire rupees 3000. Then the next question we have here is, please focus, very important. Goods costing rupees 1000 burnt due to fire. So what will be the first entry we'll write? Loss of stock due to fire 1000 to purchases account 1000. Okay. And the insurance company accepted claim of rupees 800. See, when insurance company is accepting the claim, it means first we have to file the claim. When we are filing the claim, we will write insurance company account debit to loss of stock. The same thing here, account. It is how much? 1000 and 1000. See, accepting the claim and filing the claim are two different things. What happened? 1000 rupees goods were burnt. I thought all the goods are already insured, so I thought I will get entire 1000 rupees from the insurance company because my goods were already insured. So first it were burnt, then I filed an insurance claim with insurance company. So I will write here being claim was filed. But what happened? When I filed the claim, insurance company checked my documents and they checked all the stock. They said we will accept the claim only for 800 rupees, and they gave me the check for 800 rupees. It means I will receive only 800 rupees from insurance company. But I thought they will give me 1000 rupees. It means I incurred a loss of 200 rupees, and we know whenever there is a loss we will debit it. Now be with me very carefully. They gave me the check, so I will write bank account debit 800. You can also write check in hand, but we write bank because when insurance company is giving the check, it will normally pass. There is no chance of dishonor and all those things. Bank account debit 800. 200 rupees is loss. So what will we write in loss? We will write here profit and loss account debit. If you remember, while learning about the sales journal entry in the previous videos, when we sold machine at profit, we credited profit and loss account. Now we are incurring loss, so we are debiting profit and loss account. We will learn about profit and loss account in detail in our final accounts chapter. Now 200 to insurance company 1000. That's it. This is what happening. First we lost the stock. After that we told insurance company that we want 1000 rupees from you. They said we will not give you 1000 rupees, we will give you only 800 rupees and you have to bear the 200 rupees loss. Now moving further to the last topic of our journals, that is adjustment entries. Now, what is the first entry? The first entry is closing stock or inventory. Unused stock worth rupees 15,000. It means on 31st March. Remember, adjustment entries are passed on the last day of the accounting year, and in India normally we follow 1st April to 31st March year for accounting. So we are on 31st March. Adjustment entries are like unused stock worth 15,000. It means at my shop or at my godown there is 15,000 rupees closing stock that I have to record in my books of accounts. So I will write closing stock account debit to trading account. This is the new account, trading account. We will learn in detail about trading account in final accounts. Closing stock account to trading account, how much? 15,000 and 15,000. Now, the next entry we have here is outstanding expenses. Understand what is outstanding expenses. Suppose 5 employees are working at our shop. Okay. We pay our employees on the 3rd day of every month. Like if they have worked for entire January, I will pay the January salary on 3rd Feb. When they will work for entire Feb, I will pay the salary on 3rd March. When they will work for entire March, I will pay the salary on 3rd April. It means they are saying salary due to staff is 25,000. What does it mean? Staff has worked for entire March. I am supposed to pay them 25,000 rupees. If I have to pay them 25,000 rupees, don't you think it is my liability? I am supposed to pay them. It is my liability, and second thing is it is my expense because I am paying the salary. If I am paying the salary and I have not yet paid, see, if I pay the expenses, what do we write? Salaries to cash. But when I have not paid only, what do we write? We will write salaries account debit to outstanding salary account. How much? 25,000. 25,000. See, this salary is my expenses. Why expenses? Because my staff has already worked for me. I have already took the benefit. The benefit is already derived. So it is my expense. But I have not paid them cash. Therefore, I am still supposed to pay. That's why it is my liability to pay them. So I am writing liability outstanding salary, that I am still supposed to pay salary to my staff. This is my point number 1. The point number 2 is rent rupees 2,000 per month, but the rent of last month is unpaid. Oh my God, I had to pay 2,000 rupees every month, but for the last month I did not pay the rent. So same as salary, what will I write? Rent account debit. 1 month's rent is pending, so I will write 2,000 rupees. 2,000 rupees rent account debit to outstanding rent. 2,000. 2,000. Now going further, prepaid expenses. What does it mean? Suppose we are doing business and we are still in the January month, and I pay the rent for January, Feb and March also. So if I have paid the rent for Feb and March also, that's why we call it prepaid rent, that I have already paid rent in advance for future. What will I write the entry? See, out of the rent paid this year, rupees 3,000 relates to the next year. I have already paid the rent of next year also. So I will write prepaid rent. Why prepaid rent? Because whatever I have paid, I have not yet derived the benefit. If I have not derived the benefit, it means it is my asset. I have paid the money, not derived the benefit, asset, prepaid rent account debit to rent expense 3,000 3,000. Now, going further, next is accrued income or income earned but not received. Think like this. I gave my friend 1 lakh rupees as a loan. He told, see, I will pay you 1000 rupees interest for this month. I said, okay. 1 month passed away. He gave me my 1 lakh rupees back, but he still did not give me the 1000 rupees interest. So I can say he is liable to pay me 1000 rupees as interest. Okay. Interest is my income in this case. Very good. Interest is my income. I have earned the income. Why? Because 1 month has been passed away. But I have only earned the income. I have not received any money. So I will write first interest due but not received. It means it is already due. He should pay me the money, but he has not paid. I have not received. So I will write interest accrued, or you can say interest is receivable by me. I must receive the money, right? Interest receivable account debit 4,000 to what is the name of income? Interest income. This is my asset account and this is my income account. I earned the income, but because I did not receive it, so I will write interest is still receivable. How much money? 4,000. Now, second point is accrued income rupees 500. So you can directly write accrued income account debit income account. If they mention the name of the income, we can mention the name here to this income or to interest income, whatever. 500. Now, moving further, income received in advance or unearned income. What does it mean? What if we receive the money in advance and the person asks us to provide the services later? For example, suppose a person pays me the tuition fees for the entire year on the very first day, and that student tells me, I am making you the entire payment today. It means I will receive the entire payment, but it is my liability to provide services for the entire year. Now, what will we write? Received commission of rupees 10,000 by check, half of which is in advance. It means I have received commission of how much? 10,000. So I will write here bank account debit 10,000 rupees. Simple. They are saying half of which is in advance. It means what? I have earned 5,000, but I have received 10,000. I have received 10,000, half of which is in advance. If I have received money in advance, it is my liability because I would be still obligated, or it is still my liability to provide some services. So bank account debit 10,000 because I received the money. To commission income, because it is my income. How much? 5,000 is my income. Extra 5,000 I received in advance. So what will I write? To commission received in advance. See, both the name are commission only, but the nature of account is different. This is income account, what we have earned and we have received, but this is not income, this is my liability. Why? Because I have already received the money, but I am still supposed to provide services for future. To commission in advance, how much? 5,000 rupees. Moving further, the last few points we have here are, first is depreciation. What is depreciation? See, we have an entire chapter on depreciation. Still I am telling you a little bit in detail what is depreciation is. Depreciation means the value of our fixed asset falls due to continuous usage at our office or at our factory. For example, machinery, building, as more as we are using our machinery in our factory, they will start getting rusting and the value of the machine will fall. So what we are writing, provide 10% depreciation on furniture costing rupees 70,000. They are saying the furniture at our shop which was valued at 70,000 provide 10% depreciation. It means the value of my furniture has fallen. We both know that furniture and machine are asset account. If the value is falling, what will we write? We will write for furniture depreciation account debit. Why depreciation account is debited? Because it is our expense. Because the value is falling, depreciation account debit. If the value is falling, so to furniture account. We know whenever asset decreases, we credit the asset account. So depreciation account debit to furniture account. How much? 70,000 rupees into 10%, that is 7,000. Same thing with the machinery. Depreciation account debit to machinery account. 1 lakh into 5%, that is 5,000. Now, moving further, interest on capital charged rupees 1200. What is interest on capital? See, in the case of sole proprietor, when there is a single owner gives the capital to the firm. Remember the first journal entry, cash account debit to capital. It means what? Proprietor has given money to the business. Now, business will give him back some interest on that capital, and that interest on capital is 1200. Understand? Interest on capital is income for proprietor, but it is expense for the firm, because firm will pay interest on capital to the owner or to the proprietor. So the entry for this will become interest on capital account debit to capital account. How much? 1200. Now, what is interest on drawings? See, whenever the owner withdraws some money or borrows from the firm, it means he is drawing the money. Whenever he is drawing the money, he has to pay some interest to the firm. This is the reciprocal of interest on capital. Now, interest on drawing is paid by the owner to the firm, and it is income for the firm. So, firm will reduce the money directly from capital account of the owner. So, the entry will become capital account debit to interest on drawing. How much? 300. Why are we using capital account both the places? Because whenever firm deals any transaction with the owner, they will use the capital account. They will deduct the money from capital or they will add the money in capital. Just recap, interest on capital is expense for the firm, but interest on drawing is income for the firm. We are doing accounting from the viewpoint of firm only. Now, just to give you a brief about the last very important thing that we will deal later in final accounts chapter, just to understand what happens in the transfer entry, the account will be reversed. What does it mean? For example, salary expense paid is rupees 100. How do we generalize? Salary account debit 100 to cash 100. Very simple. But when we transfer the expense to profit and loss account, this we will learn in final accounts chapter. Expenses will be credited and the entry will be as follows. P&L account debit to salary. It means which expense got debited earlier, that expense will be credited again. This is how the accounts will be closed. This is the closure of accounts. We will read it in detail. I am just giving you the brief here. Why? Because we always learn that all the expenses will be debited always. No, it doesn't happen like that. It will be debited first, but then it will be credited at the time of closing the books of accounts of the business. Thank you so much. We'll meet in the next video.